Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be the Wednesday, the 30th of April 2025, and also we come to the end of April as we approach the next brand new trading month of 1st of May tomorrow. So as usual, before we start our gist of today Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the intraday technical outlook on the broad-based cross asset classes, let's have a recap what has taken shape yesterday in terms of news flow, economic data release, especially for today Asia session. There are actually two economic data release on share with you guys, and as well as their impact on the broad-based cross asset classes. All right, so without further ado, let's as usual take a look at the key important movement of the major US stock indices. So yesterday, the major US stock indices continues to be rather jovial in its upbeat move. So all the four major US stock indices after Tuesday, after we call it Monday's consolidation, yesterday's, which is yesterday, that means i.e. Tuesday 29th of April, performance was rather robust on the upside. So all the four major US stock indices managed to shape a return of 0.6% to 0.75%. So the S&P gained by 0.58%, the Nasdaq 100 0.61%, the top performer, the Dow Jones Industrial Average, up by 0.75%, and the Russell 2000 up by 0.56% over here. So if you look at the heat map of the S&P 500, almost all of them are in the green, what you could see over here. And if you look at the sector performance of the S&P 500 yesterday, primarily coming in from the financial, which is the top performer yesterday on the intraday basis, up by 0.83%. The consumer defensive, consumer staples up by 0.78%, and on another defensive, healthcare is up by 0.78%, whereas the heavily weighted technology is up by 0.55%, almost on par with the performance of the S&P 500. So what I could see over here is that we still see a bit of hesitance by the bulls to actually power up in the technology sector, whereas the top performer, it comes from the defensive sector, which is the consumer staples, i.e. the consumer defensive, and healthcare, which is up by 0.78% each over here. All right, so the reason why we start to see a continuation of this jovial mood in the US stock market yesterday is being portrayed also by trade deal optimism. So yesterday, there's this piece of trade deal optimism, two news flow. Firstly, Trump signed an executive order to ease off some of the 25% tariffs burden that is being lobbied by US automobiles company. So what do I mean by this? So if you look at this news flow over here, so we know that recently there are a barrage of, we call it different kind of US trade tariffs. One is country based and one is sectorial based. So sectorial based is product based, that means i.e. regardless where this product is being produced, so produced from, that means US has a blanket 25% tariffs on automobiles imports coming into US, be it the full car as well as the parts of these automobiles that's being shipped into US, regardless where the country is from. So previously there was this 25% automobile import tax, okay, was set to kick in automobile components over here. So what he did yesterday, Trump signed an executive order that allow them, that means which is US automobiles firm, to offset the tariffs, which is the automobile tariffs, which is the 25%, for imported automobile parts used in US assembled vehicles, equal to 3.75% of the total value of the manufactured suggested retail price of vehicles they built in the US through April 2026. So that's about 1 year, and 22.5% of the US production through April 30th of April 2027. So what he means over here is that there's a partial offset to offset the 25% tariff by 3.75%. Yep, in the next 2 years. All right, so it's not a full removal of that 25% automobile trade tariffs, but only a partial offset of it by 3.75% over here, and that actually causes the market to actually rally, right? Because there's some of a so-called a bit of what I call hardship that is being removed, a bit only, not the total hardship on US automobiles. And another one is by US Commerce Secretary. Okay, so right at the bottom, yeah. So US Commerce Secretary Howard Lutnick told CNBC that he had reached one deal with a foreign power that should permanently ease the reciprocal tariffs. That means, you know, that reciprocal, there is a base tariff of 10% and a reciprocal tariffs where the US administration has a different rate on different country. That means, i.e., China is the most, which is 100 over percent. Then you have 25% plus on Japan. So he's saying that this deal with a foreign power could permanently remove the higher reciprocal trade tariffs, but the base of 10% still remain. And he declined to identify which country is it, saying the deal was pending local approvals. And he said that I have the deal done, but I need to wait for their prime minister and their parliament to give its approval. So prime minister, very likely, which country has this ongoing deal with trade negotiation deal so far in the last 2 weeks. With US is Japan, India, and South Korea, where they send their representative for trade negotiation talks. So the White House official has no further comment on the country in question. So that also causes a positive feedback loop into the US stock market yesterday. All right, it's a record of the stock market yesterday. And let's take a look at the performance of the FX market over here. So let me share with you guys. So the performance of the FX market, the dollar still remains rather weaker over here. So what I could see is that this is the US dollar index on the daily time frame. So the US dollar on the daily time frame, if you look at the last 3 session, is a rather weak price movement as it continues to inch lower below this declining 20-day moving average. All right, over here. So the price action of the US dollar is still rather weak. So yesterday, the US dollar is only up marginally 0.25%, and it can't actually clear above this bearish candle that was this big bearish candle in the last 5 days, which is the biggest we call it body, the black body. So it can't clear above the half of the black body so far. Okay, okay, the half of the black body, and remains below it yesterday, right, at 99.29. All right, so this is the rather strong bearish movement on a daily basis on the Monday, this Monday, 28th of April. So the yesterday price action rather minute, only up 0.25% by a small little white candle on the US dollar index, and it can't clear above the halfway mark of this big daily bearish candle, which is the daily Marabozu. And in today's Asia session, it also attempt to clear above, but so far try to struggle as we are speaking right now. So it seems to us that the US dollar index, representing a general movement of the US dollar, there is no clear US dollar strength coming into the picture right now on the short-term basis, despite the fact that the movement of the US stock market is rather robust, right, in the last 2 days or so. So that means there is no so-called strong dollar strength coming back into the picture in the FX market, whereas we see the US stock market continues to be in a jovial mood because of US trade deal optimism. And do not forget, this week we also have the mega cap technology stock reporting as well. So this desynchronization in the movement of the US dollar and the US stock market could be related to this aspect of things. That means trade deal optimism the US stock market is paying more close attention to it, but the FX market does not move in line with that. And also US earnings that is also playing a short-term factor or short-term driver in the current jovial mood of the US stock market. So after this week earnings announcement by the mega cap stocks over here, the movement of the US stock market will be very important to see whether the last week and these past 2 days, whether this movement is a dead cat bounce or indeed a start of a new medium-term bullish trend to take it to fresh all-time high. And another catalyst I want to share, another driver I want to share with you guys is the oil price as well. So we know that oil price has been weak in the last 3 to 4 session, and yesterday oil price continues to tumble and it fought by 2% to hit a 2-week low over demand concern, external demand concern. So the story over here is that we still see very conflicting movement by different asset classes that doesn't move in line. Okay, so what you could see over here is that the US stock market remains in a very jovial mood because of trade deal optimism, but the oil market is not reflecting any trade deal optimism at all. It continues to be rather pessimistic about the continuation of this weak external demand driven by what I call the ongoing trade tension between US and China and against other major developed nations like with the EU, the Eurozone as well. And also OPEC price has also been pretty much driven by internal factor, which is the OPEC price booster. So OPEC Plus so far has shared its intention next month to actually hike its production. Right, that has been delayed for I think the last 3 to 4 months or so. So with this increase in production from OPEC Plus that they deem they have signal to actually add more oil into the market, coupled with a weak external demand due to trade tariffs tension between US and China, that actually saw a negative feedback loop into oil price, which is fall by 2% yesterday, right, to a 2-week low. So what we could see over here is that different as the FX market and the oil market is not reflecting trade deal optimism. Instead they are reflecting medium-term negative feedback loop potentially could caused by a external demand shock negatively triggered by ongoing trade tension, or as well as the long-term negative impact on economic growth of higher tariffs. Do not forget, even though Trump negotiate any trade deal with any country, that only focus on the reciprocal trade tariffs. The additional 10% base tariff will still remain intact. So that actually also saw the US dollar gaining without much significant strength as well yesterday. All right, so now let's just take a look at the key economic data released this morning over here. So this morning, before the start of our the start of our daily dose, we have the Australia CPI data release. So they have 2 sets of data release for Australia. So Australia has a quarterly release and a monthly release. So the quarterly data for Q1, that's more kind of outdated over here. The trim mean rate. Okay, the trim mean rate, that means represent the core CPI excluding energy and food prices, that tends to be much volatile, came in line with market expectation. So market is expecting 2.9% year on year. It came in at 2.9% year on year exactly for Q1, so no big changes. And also the monthly CPI indicator, so that's for the month of March, came in at 2.4%. Within the same rate of growth as the previous month of February at 2.4% as well. So if you were to flash out, you open the link over here. Okay, give me a couple of seconds to actually load the web browser, because it tends to be a bit slow as we do this live webinar. Right, it's out now. Okay, so what you could see in the last 4 months since December, The monthly CPI, we call it indicator that representing a much more reflect a much more up to date inflationary trend in the Australia rather than the quarterly one, has starts to hover around 2.5% to 2.4% in the last 4 months. So what it means that over here is that it's facing a lower risk of a inflation revival, because in the last 4 months or so it has been rather plateau over here, but market participants will got to look for 2 more data for the, especially for April and May, given the fact that US tariffs only kick in April. All right, so this is in March over here, so we got to wait until like April to May to see whether will there be a inflation uptick or not coming into Australia. So but with that, the Aussie dollar continues to remain stuck, all right, in a very tight trading range of in a very short term basis. And also yesterday they actually failed to actually break above that 64 figure level again. All right, that later I'll share with you on the technical chart of the Aussie dollar. There's this hesitance at around the 64 figure level as we are speaking right now. All right, that's for the Aussie dollar. And also another a key economic data I'll share is out from China, which is the manufacturing PMI and the non-manufacturing PMI releases by the government compiled board, which is MBS, the statistical board. So the MBS manufacturing PMI for China for the month of April still rather remains firm at around the 49 level, so slightly below expectation of 49.8 and below the 50.5 we call it level in the previous month of March. And as for the non-manufacturing PMI, which represented the services sector over here, continues to be around the 50 level mark over here. So basically no major changes in the levels, I would say. So it came in at 50.4 for the month of April for the non-manufacturing PMI for China, slightly below expectation of 50.7 and slightly below 50.8, which was the previous month of March. All right, and what we have over here is the Caixin manufacturing PMI. So what's the difference between the Caixin manufacturing PMI for China and the MBS manufacturing PMI for China? Firstly, MBS manufacturing PMI for China is compiled by the government board, which is the statistical board. They call it the National Bureau of Statistics, that consists of large manufacturers in China, or I would say that large firms in China, whilst the Caixin manufacturing PMI is compiled privately by a private company called Caixin, which is one of the big major news we call it media in China. But the Caixin manufacturing PMI consists also of SME, small medium enterprise over here. So some market watchers will tend to rely more on the Caixin compiled PMI because it consists of more comprehensive view on the manufacturing sector and as well as the services sector, because the data consists of large firms and as well as smaller firms, which is the SME. So the Caixin manufacturing PMI actually came in better than expected. So consensus is expecting at 49.8. It came in at 50.4, but still below the 51.2 in the previous month of March. So what I could see over here is that there is no big surprise on the upside and the downside by the release of this by the release of the MBS manufacturing PMI and the MBS non-manufacturing PMI, and as well as the privately compiled Caixin manufacturing PMI of China. And that also causes the Hang Seng indices to remain in a rather we call it a muted reaction over here, but the Hang Seng managed to close to trade positively up as we are speaking right now, 0.22%, and the Hang Seng Tech Index that comprises of the China big tech stocks up higher by 1.25%. So I would rather say that it's a rather a mild upbeat mood seen in the Hong Kong stock market right now. All right, after the release of that rather we call it flattish, no major big surprise and major upside surprise and no major upside surprise and no major downside surprise on those PMI data that is up from China a while ago, which I shared with you just a while ago. All right, so with that, now let us now focus our attention to the short-term intraday technical outlook, okay, on the broad-based cross asset classes, starting with the major FX pair first. All right, so let me expand my screen over here. Okay, so just to make sure that everything, the screen is good so far. Okay, let me okay, give me 1 second. Let me check whether the sound check is good or not. All right. Okay, I think it should be fine. The sound and as well as the presentation should be good. Okay, so let me start with the euro dollar first. All right. So for the euro dollar, the price of the euro dollar continues to trade sideways yesterday, but remains above the ascending channel support, or I would say a minor ascending channel support, as you could see on the screen, which I drew from the low of 2nd of April. We could see over here. The RSI over here seems to be rather mixed at this juncture point in time. It's neither here nor there at this juncture. So it actually retraced below the 50 level mark, and price the 50 level mark, indicating the lack of upside momentum. But price action on the hourly euro dollar managed to still hold above this ascending channel support that I drew from minor ascending channel support that I drew from the low of 2nd of April. All right. So what you could see over here is a rather lackluster movement on the euro dollar so far. So very likely it may starts to be trapped in the sideways range for today. All right, at this juncture. So what we could do over here is that for the euro dollar, I will have a neutrality stance for today on the euro dollar, given that it may starts to be inside this sideways range at this juncture. So with that, I will have a neutrality stance on the euro dollar for today. All right, given the rather lackluster movement on the RSI as it broke below the 50 level mark. So kind of mixed element on the intraday basis on the euro dollar. So let me put up. So neutral stance on the euro dollar for today. So neutral between 113.40. Okay, let me put it in writing. Give me some time to load this thing. Okay, good. 113.40. All right, and the upper limit will be yesterday's US session high. Okay, that come break at 114.25. 1.1425. Okay, so let me remove this. Okay, give me a couple of seconds to do some amendments on the text. Okay. Okay, give me a couple of seconds. Okay, great. Okay, so now I repeat again, because of the lackluster movement on the hourly RSI, okay, that's now broken below a parallel trend line support and is now trading below the 50 level mark, indicating the lack of upside momentum. But the price action of the euro dollar continues to be holding above the minor ascending channel support, which I drew from the low of 2nd of April over here, which is at 113.40. Okay, so with that, there will be a higher probability that there will be a lackluster movement on the euro dollar for today, perhaps in the sideways range. So I will flip to a neutrality stance for today at 114.25 and 113.40. So only a hourly close and a breakout above the upper limit of this neutrality range, which is 114.25, will potentially trigger the bullish bias back into the picture in the euro dollar on the intraday basis, exposing the next intermediate resistance level at 114.80. Then thereafter followed by a possible retest at 150.80, which is close to the minor swing high area of 21st of April. So given conflicting elements right now on the euro dollar, I would prefer to switch to a sideways neutrality stance for today on the intraday basis between 114.25 and 113.40, and watching the upper limit at 114.25. So that's for the euro dollar. Next up will be the this sterling dollar over here. Right, so the sterling dollar, what we could see over here is that it continues to hover above the first support level at 133.80, which we highlighted yesterday, and the pivotal support will be at 133.40. Okay, so yesterday price movement was a rather sideways lackluster movement, as we could see over here. RSI still able to hold above a parallel ascending trend line that I drew from the low of 23rd of April. Okay, and now it's the Asia session is testing at this parallel ascending trend line. So with that, the key level still remains unchanged on the downside. So to me is that the trend of the sterling dollar since the low of last Wednesday, the minor uptrend still remains intact. Okay, so it's a minor uptrend within a short-term uptrend. So the minor uptrend from 23rd of April low still remains intact because price action still hovering above these two key support that I highlighted yesterday. The first support at 33.80, pivotal support, short-term pivotal support at 33.40. So as long as this short-term pivotal support holds at 133.40, I will still maintain today's intraday bullish bias on the sterling dollar. First resistance level to watch will be at 134.80, which is close to the upper limit of this medium-term ascending channel that is in place since the low of 13th of January this year. All right. So however, if price action starts to do a bearish breakdown and hourly close below 133.40 short-term pivotal support, today intraday bullish bias will be invalidated to kickstart another round of intraday mean reversion decline scenario, exposing the next near-term support zone at 132.50/132.05, which is coming very close to the rising 20-day moving average as well. Right, so that's for the sterling dollar, still maintaining the intraday bullish bias using 133.40 as my short-term pivotal support level. Okay, next up will be the Aussie dollar. So the Aussie dollar, let me share with you the chart of the Aussie dollar on a longer time frame. All right, so this is the weekly chart of the Aussie dollar. So what I could see over here is that there's this 64 level, which is rather key. So why this 64 level very important? Because previously it was the former major ascending trend line from the low of 13th of October 2022, and this major ascending trend line has been broken down since early December last year. All right, and price action breakdown, and in three instances, which is on the week of 17th of February and the week of 17th of March, and most recently on the week of 31st of March, there is three bearish reaction of it. All right, and in the last 2 weeks over here, the week of 21st of April and as well as the week of 14th of April, it can't clear above 64 figure. And in the week of 21st of April, which is last week, it has an intraday high of 64.39. But by Friday, by the end of the week, it has a weekly close of 63.96. Can't break above 64 figure. And right now, as the week progressed, this week for the week of 28th of April, so we know that this week hasn't ended. You got to wait for until 1st of May to end. But so far, current date to week over here, that means as of today, the price action also shaped that upper shadow, which has an intraday intra-week high of 0.6450. Then after that, as we are speaking right now, price action starts to retrace down and it tries to trade around at 64 figure level. That means this week will be a crucial week on the Aussie dollar to see whether can it surpass with a weekly close of 64 figure. Because if you look at last week, the price action on the Aussie dollar shaped a spinning top, a weekly spinning top. So represents indicating that the bullish tone are rather hesitant. And right now, you also try to trade another impending weekly spinning top candlestick as well. Why do I use the word impending? Because the week hasn't ended yet for this week, and it occurs, these two spinning top occurs right at the retest of this dotted gray line, which is the former major ascending trend line, now turns into a key significant pullback support right now, and as well as the 200-day moving average, which is coming very close to it as well, that is still downward sloping, and price action has broken below the 200-day moving average since the week of 21st of October last year, 2024 last year. All right, so if you look at the price action of the Aussie dollar, as we are speaking right now, the bulls are rather hesitant at around the 64 figure level, which is the element that I share with you on the longer term chart, which is the weekly chart, to remove off, or not to remove, to reduce the short term noises, all right, on the Aussie dollar. So on a hourly chart basis, on the short term basis over here, yesterday we were neutral over here, between 64.10 and 64.70, and price action now broke below 64.10 as we are speaking right now, and 64.70 is my 200-day moving average resistance level. All right, so with that, we could potentially see at least a minor dip for today on the Aussie dollar using 64 figure level, given that price action has broken down below 64.10. Using 64.70 as my short-term pivotal resistance level on the Aussie dollar, we will flip to a intraday bearish bias on the Aussie dollar. So for the first support level to watch out for will be at this 64, okay, this one level here. Okay, this is last Thursday low. So 64.40, okay, 63.40 slash 35. Right, 63.40 slash 35. All right, so this will be my first support level to watch. Only a breakdown below 63.35 potentially may expose the next near-term support zone at 62.80 slash 62.50, which correspond to the rising 20-day and the 50-day moving average. Only a sudden push-up and the hourly close above 64.70 will invalidate today's intraday bearish bias to see a squeeze up to the next intermediate support zone of 65.20 slash 65.50, which is the congestion area of 31st of October and 22nd of November last year. Right, so using 64.70, which is the 200-day moving average, as my short-term pivotal support level, and given that the price action broke below 64.10, which is yesterday neutrality range lower limit, will flip to a intraday bearish bias, but with a rather high near-term support level to watch, which is 63.40 slash 35, because price action still continues to trade in this minor sideways range since the low of 16th of April. All right, which is the range support level at 63.40 slash 35. So that's for the Aussie dollar. Next up will be the dollar yen. So the dollar yen continues to trade rather lackluster ahead of tomorrow's key important we call it key important data that is related to the dollar yen, which is BOJ meeting. So later I'll touch up more about that when I do the last segment of today's daily dose. All right, so still no change, still look at the pivotal resistance level at 143.20 slash 60 to maintain a intraday bearish bias. First support level equal to surpass will below will be 1410. A breakdown below 1410 re-exposes the 22nd of April minor swing low area at 140.30 slash 140 figure level. However, an hourly close and a breakout above 143.60 will invalidate today's intraday bearish bias to kickstart another leg of short-term mean reversion corrective rebound scenario, exposing the next intermediate resistance at 144.10. A breakout above 144.10 may see 145.10 next. So that's for the dollar yen, still using 143.20 slash 60 short-term pivotal resistance zone to maintain our intraday bearish bias. Okay, next up, we will cover the intraday technical outlook on the major stock indices, starting with the Hong Kong 33. So no change for the Hong Kong 33 as it continues to trade above its 20-day moving average. and also above the short-term pivotal support that we highlighted yesterday, which is at 21,750 slash 21,605, and price action now retested rather positive by having a two bullish hourly candle that we are speaking right now after close to a retest of it near the opening hours of the Hong Kong stock market today. All right, so after you see a small little we call it, this is a inverted hammer, okay, a inverted bullish hammer, and followed by a hourly bullish Marabuzu candlestick. All right, so there's a positive follow through after a close retest at the short-term pivotal support zone that we highlighted yesterday, which is 21,750 slash 605. So no change given the positive price action that we are seeing right now at above the 20-day moving average and also slightly above the pivotal support zone that we highlighted. So indicating that some form of positive momentum is coming back into the Hong Kong 33 index. So with that, still maintain our intraday bullish bias on the Hong Kong 33. Two key near-term resistance level to watch on an intraday basis will be 22,220, followed by 22,500. Above 22,500, may see the next intermediate resistance coming in, a zone at 22,790 slash 22,990, which is the congestion area of 31st of March and 3rd of April, and as well as the 50-day moving average acting as a resistance level as well, that confluence with this zone of 22,790 slash 22,990. However, if price action starts to have a bearish breakdown and an hourly close below 21,605, today's intraday bullish bias will be invalidated to kickstart another round of choppy mean reversion decline sequence. So on the short term, the next two support level to watch will be 21,180 followed by 20,840. So i.e., given the positive price action that we're seeing right now on the Hong Kong 33, we will still maintain the intraday bullish bias using 21,750, 21,605 as my pivotal support level to maintain this bullish view. Next up will be the Germany 30. So the Germany 30 continues to trade sideways. No change as we are speaking right now. It's still testing. It's now testing the upper limit of yesterday neutrality range, which is 22,570 followed by 22,240. All right, so with that, I'm going to have a neutrality stance, but I'll be watching the upper limit at 22,570, an hourly close and a breakout above 22,570 during the start of the European session today will potentially kickstart a bullish bias view on the intraday basis for the Germany 30, exposing the next near-term resistance level at 22,920, followed by 23,230 next, which is the congestion area of 19th of March and 26th of March. Only a sudden breakdown and an hourly close below 22,240 will kickstart another round of choppy minor mean reversion decline sequence to retrace at least certain portion of this ongoing rally from the 7th of April high low to 30th of April high, exposing the next near-term support level at 21,830, followed by 21,540. We saw confluence with the 20-day moving average, I think as a similar support level as well. So still maintaining that neutrality stance with a slight bullish bias on the Germany 30, watching the 22,570 upper limit of that neutrality zone. Next up will be the major US stock indices, starting with the Dow Jones Industrial Average, represented by the US Wall Street 30 in our platform. So the Dow Jones the US Wall Street 30, managed to clear above our first resistance yesterday, which is at 40,380. Now turns into a pullback support level in today's Asia session, where price action shape a minor pullback right now. All right, so the key support level to watch will be a slightly adjusted one today at 39,870, which was the minor swing low of last Tuesday, and also correspond to, and also the minor swing low of the previous Friday of the minor swing low of this Tuesday, which was this Monday, that means US session low on this Monday, and also last Friday US session low as well, which is at 39,870, and also correspond to the 20-day moving average, I think as a similar support area as well. So with an adjusted short-term pivotal support level today at 39,870, we'll still maintain that intraday bullish bias on the US Wall Street 30. Next resistance level to watch on the near term will be at 40,910, which is the minor swing high area of 10th of April. And the RSI also continues to be holding above a parallel ascending trend line above the 50 level mark as well. Above 40,910 exposes the next intermediate resistance zone at 41,470, 41,740, which correspond to the downward sloping 50-day moving average. I think as a similar resistance level, and the previous gap resistance level that is being formed on the 3rd of April and the 3rd of April, yeah, the gap resistance. All right, so i.e. in a nutshell, still maintaining that intraday bullish bias using an adjusted short-term pivotal support for today at 39,860 on the US Wall Street 30 index. Next up will be the Nasdaq 100. So the Nasdaq 100 continues to trade higher yesterday, and we start to see the hourly RSI continues to be holding above this parallel ascending trend line as well. So no change, still using the 19,060 short-term pivotal support level. So it will be a slightly adjusted pivotal support level from yesterday. Yesterday the pivotal support was around this 19,040. So I adjusted slightly higher, which is the former minor swing high of 10th of April, and as well as this Monday US session low as well, which is at 19,070. So using 19,060, pardon me, not 70, a bit of tongue twisting, so which was the former minor swing high of 10th of April and this Monday US session low, right? So using an adjusted short-term pivotal support at 19,070, we'll still maintain that intraday bullish bias on the Nasdaq 100, with the next intermediate resistance zone coming in at 19,800 slash 19,945, which is very close to the 50-day moving average, I think, as an intermediate resistance level as well. Only a sudden bearish breakdown and hourly close below 19,060 that would invalidate today's intraday bullish bias and potentially kickstart a intraday mean reversion decline sequence towards the next near-term support level at 18,670, which correspond to the 20-day moving average. A breakdown below 18,670 sees the extension to on the downside to expose the next near-term support level at 18,285, which correspond to the lower boundary or the minor ascending channel support that I drew from the low of 7th of April. Okay, so that's for the US Nasdaq 100. All right, so with that, that sum up the intraday technical outlook on the major stock indices. Let us now focus our attention to the commodities market, starting with gold XAU/USD. So for gold XAU/USD, gold continues to trade sideways above the pivotal support that remains unchanged since last Friday, which is at 32,087/3242. All right, so as long as this 3287/3242 short-term pivotal support holds, will still maintain the intraday bullish bias, but the first resistance level will be at 3370. Only a breakout above 3370 may trigger the odds of a higher chance of a bullish momentum revival coming back into gold XAU/USD, exposing the next near-term resistance at 34,420 next in the first step. So that's for the intraday basis. However, if price action starts to break down below 32,242, today's intraday bullish bias will be invalidated to actually kickstart a bearish breakdown to open up scope for another leg of minor corrective decline sequence within its medium-term uptrend phase that is still intact because price action is still trading above the 50-day moving average, exposing the next near-term support level at 31,194/31,162. So it's 31,94/3162 next if 32.42 is broken down on the downside. So that's for gold XAU/USD, still using 3287/242 as my short-term pivotal support level to maintain the intraday bullish bias. But in order for the bulls to gain more traction on the intraday basis, price action got to break out above 33.70. Okay, so that's for gold XAU/USD. Next up will be the West Texas oil. So West Texas oil continues to remain weak within our expectation and hit our first support level at 60.08 yesterday. Yesterday we do have a bearish bias below 63.88. So given that it has already cleared our first so-called support level, which is at 62.39, this one turns into a pullback resistance level and hit our next support at 60.08. So this pullback resistance level today will be our Titan pivotal resistance level, which is 62.39. Okay, let me expose. Okay, give me a minute. Okay, let me put it in writing. Okay, it's not showing. Oh gosh, what's going on? Okay, good. Okay, this is 62.39. So this will be my normal pivot, my normal resistance, not pivot. All right. Okay. Oops. What happened? Okay, let me write again. What's going on? 63.88. Okay, 63.88 over here. There's 65.40. Okay, so given that price action has really tumbled by a fair bit, so for a better risk management perspective, the intraday trend or it still remains bearish on the West Texas oil at this juncture. Hourly RSI is at the oversold, but there's no bullish divergence that's been fleshed out. So there could be some signs of a bounce taking shape during the start of the European session, but lower odds of a bullish reversal given that there is no bullish divergence that is being formed on the hourly RSI. So given that it hit the 60.08 support level, the next support level at 60.08, there could be some form of minor bounce. So as long as this minor bounce didn't surpass this Titan short-term pivotal resistance level, previously a key minor range support from the low of 21st of April to 25th of April, yesterday decisively has been taken downwards, taken downwards. That means price action reacted off it and shaped a bearish sell-off. So this level will be a key psychological level, which is our pivotal resistance level for today, a Titan one at 62.39. So as long as any minor bounce didn't surpass above 62.39, we'll still maintain our short-term intraday bearish bias on the West Texas oil. Below 60.08 exposes the next near-term support level, next at 58.30 for today on an intraday basis. However, a price action starts to have an hourly close and a breakout above 62.39. Today's intraday bearish bias will be invalidated to see a choppy upward drift to retest 63.88 and potentially even 65.40 next. All right, so that's for West Texas oil, still maintaining that intraday bearish bias, but for today with a tightened short-term pullback resistance in any minor bounces, using 62.39 as my short-term pivotal resistance level. Right, so that's sum up the intraday technical outlook on all the major cross asset classes. So before we go, let's take a look at the economic calendar. What are the key data to look out for today, which is rather a lot to look out for, and as well as tomorrow early Asia session. So for today European session over here, we have a couple of European data to chew on over here. So we have the Germany at 4 p.m. will release the Q1 GDP growth rate, flash Q1 GDP growth rate, which is a preliminary Q1 GDP growth rate that could impact the German 30 and as well as the euro dollar and the euro crosses pair. That's 4 p.m. Singapore time. And after that, at 5 p.m. Singapore time, it will the Eurozone Statistical Board will release the Eurozone GDP Q1 growth rate. All right, so that is the consolidated one among all the Eurozone countries. So that is called the Eurozone Q1 GDP growth rate. All right, at 5 p.m. Singapore time. Then thereafter, during the European session ends, at the start of the US session, we have tier 2 economic data that could have an impact on the US market, especially on the major stock indices, will be the privately compiled job data. They call it the ADP employment change, something like a prelude to this coming Friday government compiled non-farm payroll. But that's not tier 1, that's tier 2. 8:15 p.m. Singapore time, ADP employment change, something to take a look at. Then followed by 8:30 p.m. we have US GDP growth rate, Q1 growth rate, which is a preliminary one as well, that may impact the major US stock indices and as well as the major dollar pair. Then thereafter, we have inflation data up from US, which is the PCE price index at 10 p.m. Singapore time. Okay, market participants will be focusing on the core price index, which is excluding oil and excluding energy and food. So market is looking at a slight downtick of 2.6% from 2.8% previously. All right, so that could potentially impact the major US stock indices and as well as the major dollar pair as well, given that market is now looking for a less sticky inflation scenario in the US economy. So that's 2.6% market is expecting from the previous month of February, which is at 2.8%. Then next up, we have the weekly EIA crude oil stockpile change at 10:30 p.m. Singapore time, so that could impact the movement on the West Texas oil. All right, then thereafter on Thursday, which is a public holiday in Singapore, we have Bank of Japan interest rate decision and as well as their release of their quarterly outlook report. All right, so tomorrow's BOJ meeting will be slightly different because there is at the end of because it's at the end of March. In April meeting, they will release their quarterly outlook report. That means this quarterly outlook report, market participants will also be scrutinizing as well to look for hints in the near future whether BOJ will continue its gentle interest rate hike policy by looking at their inflation forecasts and growth forecasts. So based on news report, there are some market participants expectations stating that there will be an upgrade in the inflation outlook, but there could be a potential growth we call it forecast downgrade given the potential ongoing negative impact on the US trade tariffs towards Japan. As for the Bank of Japan interest rate decision, market participants expecting no change at 0.5%, given that the ongoing uncertainty surrounding the US trade tariffs. Bank of Japan may only continue its interest rate hike cycle in the second part of this year once more clarity is being known to the officials right now. All right, so something to look out for at 11 a.m. Singapore time tomorrow. And also at given that we are still in the midst of US earnings season, and today's earnings release will be very important because they are the heavyweights of the S&P 500 and the Nasdaq 100. So at the close of today's US session, which is 30th of April, Wednesday, Microsoft and Meta will be releasing their Q1 earnings. All right, because why is it important? Because these are the heavy weightage stocks in the Nasdaq 100 and the S&P 500 that could potentially drive intraday movement in tomorrow's early Asia session, because their release of their earnings will be at from I look at the company website in Microsoft and Meta. They didn't state the exact timing of the release. They just state that after the close of the US market today. So after the close of the US market today means from 4:01 a.m. 4:01 a.m. Singapore times onward, Thursday 1st of March. So they could release from 4:01 1st of March, Thursday Singapore time for both Microsoft and Meta, because in their investor relation website respectively, they did mention the exact timing on the release of their earnings report. They only mentioned after the close of today's US session. That means after the close of today's US session, which is 30th of April, that means meaning Singapore time tomorrow morning, 1st May, 4:01 a.m. All right. So with that, that is a pretty heavy economic data released for today, and as well as other events, which is the earnings, okay, that could potentially shape two-way volatility either on the downside or upside in today's session. All right, so with that, thank you for your time. Tomorrow will be a public holiday in Singapore, so there will be no daily dose, and daily dose will be back again on this Friday, 2nd of May, and we shall speak again on this Friday, 2nd of May. Have a great restful Labor Day. Thank you.